Hello once again, everybody. Kevin and Rick here at Paper Stack, and we are in the middle of reviewing the mid-year market report for 2019. So what our team did was compile all the data on all the sales that happened at Paper Stack and crunch the numbers so we could come up with the averages. And if you've been paying attention to video 1 and 2, these numbers should be pretty darn impressive, but we're not done yet. We have a lot more to go through with you. So to get the report, if you missed it, go to the paperstack.com website, scroll all the way down to the bottom under latest news, click on the mid-year report, and there's all the data. So far we've covered investment to UPV, investment to value. The next thing we want to cover here on the bottom of your screen is average sale prices per individual assets there. What stood out to you, Rick, on these?
Well, you kind of touched on it on our last video before we left, is that the pricing, you don't have to have a ton of money. You could get into a performing loan, first position, for $53,000. For somebody in the self-directed IRA space who's looking to start investing in mortgage notes, $53,000 is really attainable. If you look at the non-performing side, $38,000 is also pretty attainable. So I was really happy to kind of look at this stuff and say, you know what, a lot of this stuff is trading underneath $100,000, which is kind of indicative where the biggest opportunity is for this, for the retail investor, for the mom and pop shops like us. It's like, we can really capitalize. One man's trash is another man's treasure. The big institutions don't want this stuff. They don't want the smaller price band stuff. Huge opportunity. So I'm happy at the pricing. Not shocked that they were coming in and trading at this sort of at this price band.
Yeah, and some people might even look at this and say, well, even that though, that's a lot of money for us to invest in an asset right now. Here's the thing. Don't forget that you can invest with other people, even if you have an IRA, and there's plenty of events that we attend. Paper Stack is there. We have tables, networking events. We're doing local events here in Central Florida. There's meetups all over the place, and you can partner with other people on these deals. But I agree, at these price points, where are you going to take $53,000 and buy a good home that you can fix up and renovate? That's the thing. You're going to be in these for so much more. Here, you would be buying a $53,000 property that is providing you with immediate cash flow every single month. I mean, you're just not going to get that by spending $53,000 on a rental home in most areas. It's just not going to work the same.
No, and also kind of like to touch on our last video, I can't help but kind of connect the dots between these two numbers right above, the number right above. You're buying, if the average price it's trading on a first position performing loan is $53,000, how great is it to know that you're buying that at 63% of the actual value? To me, that's a pretty impressive number. I don't have my calculator out here, but that probably puts it somewhere in the, buying a house worth $90,000,
yeah,
53 grand. That's pretty good. I like that position, and that's on a performing asset. That's a cash flow.
Yeah,
I love having that security. So that's really great, I think.
Yeah, and again, you start to run those numbers together as you should. If that house is worth 90 grand, you're in it for 53, you're already receiving cash flow. And again, if the market goes down, there's a lot of chatter about, are we in a bubble? Is our property value going to go down? Even if that house dropped to $80,000, your investment is safe. You're only in it for 63% using these numbers here. So it makes it a very safe investment. You're removing yourself from the landlord responsibilities and the liabilities that come along with that. And I just don't know in all markets that there's a comparable investment. I mean, the note business has really come to its own after all these years where it's recognized as an asset class. And numbers like that, I mean, it makes it tough to beat, right?
It does, and really what it does is you're capturing a bulk of the population in that price band. And if somebody's going out there to find a rental property, it's cheaper for them to own. What that means is that's an incentive to keep paying on the property. So yeah, I love the way that number looks. I like that price band for that reason exactly.
Yeah, I mean, you buy what are they paying on the securities now? The bonds? T-bonds,
negative?
they might go negative, right? I mean, your money's nice and safe. Here, you're getting great returns, and you have that security of the property as the ultimate fallback on that. Non-performing, same thing. I mean, these prices are great, and people who were looking at the note business saying, the inventory is going away. They didn't understand the ebb and flow of the market. We had a little sandbar there that clearly now these indicate, at least to me, that the market is as good as it's been when you can pay 38 grand. And again, I'll combine the numbers this time, and you're in an asset for 36%. That's ridiculous.
I just ran the numbers. That'd be buying a $105,000 house for $38,000, or buying the debt on it for $38,000. That is, that's great. That's something where I know I can make it around the track, and I can have a few hiccups. I can stomach a little dip in value, because guess what? I'm buying something for, with a lot of margin, a lot of healthy margin in there, to where, I can stomach the ebb and flows of the market pretty good.
Yeah, even if you had some challenges doing some workouts and things like that, and maybe a workout doesn't happen, and then you have to foreclose. I mean, you're in it at such a low level that you're going to make money, but you have the luxury of so many multiple exit strategies. So it's a matter of how much you're going to make and when, but worst case scenario, you're going to be just fine in your investment. And again, it's hard to find any investment comparable to that across the spectrum of investments today.
Yeah, it is. And that's one of the, you touched on it, why mortgage notes are really being accepted as an investment class. At the end of the day, they're backed by real estate, and the margins are there. They've started to withstand the test of time. It's not something where it's only when the market is in the tank that you can buy and sell a note. Looking at these numbers, the market is as strong as it's been, and the numbers are still very, very appetizing if you're looking to jump into this market. It really, I think it lends itself to new individuals coming in there. The seasoned pros see that, and they're like, this is great. They're going to be able to navigate this investment no problem. Mm-hmm. When you're new coming into the market, having margins like this, they allow you to make some mistakes along the way, which is nice. Yeah. So I think this actually is going to really, shining a light on this stuff really helps, like letting people know, like, look, you don't have to be perfect at your execution when you have margins like this to operate inside of.
Yeah, it reminds me of the old flipping days of the buildup of the market when property values were going through the roof. Everybody got into real estate, and I saw people just make huge mistakes. If they underestimated the refi by 10 grand, and at the end of the day, it's like, that's fine because the property doubled in value in 18 months. It was just ridiculous. Now, again, we're not talking that kind of market. This is the opposite. But if it takes a dip and you're in it for this, you're safe. And you know what? And I don't want to get sidetracked here, but I love talking about this stuff as you do. Do some searches on Google and find out where the ultra wealthy are putting their money right now. There's something called the Tiger Club. It's all billionaires. There was an article about them. They're moving into real estate right now. Why? They're getting a little shaky on the other investments in the markets, and they're looking for the safety of real estate, because even if they buy deep enough, you can weather those storms of changing prices. So these numbers are very, very impressive, and any real estate investor has to take notice of these. On the non-performing seconds, once again, very impressive as well. Lower entry mark, lower ITVs, and lower UPBs.
Yeah, across the board. And it's expected on the seconds part to have that lower entry mark. But still, I mean, you look at that and you start, putting them together, the 25 and a 9%. You say, wow, I know that I've got a really good deal here. One of the things that if you kind of look at that and you have an average of a 25K and you have the 9%, one of the things you do some math, you look at and say that the seconds sometimes tend to be in that higher tiered property. They're in something worth 200,000 or more. Just looking at the numbers, you're like, wow, things got to be worth 250, right? So that's one of the things to look at by the seconds is you can actually invest in maybe a class B, class A property, because it is a second position loan. You're going to have a little bit of you have more of a discount. It allows you to sort of jump up out of that lower price band assets if that's what you're into.
Great. So these are, once again, measuring sticks of risk, of opportunity. And just as a word of caution, again, if you haven't invested in seconds, don't just look at these numbers and blindly buy something. We are absolutely not saying that. You still have to know your due diligence. You should get educated on seconds, how they work, what your rights are, what your responsibility, how the negotiation goes. But it certainly should open your eyes into, maybe I want to diversify a little bit if you're in a situation where you've got a portfolio, you want to, move into a slightly different direction. That could be something to take a look at. And I'm sure we'll provide some extra training on seconds through PaperStack as well in the very near future here. So very interesting numbers. I got all 3 sets of those numbers on your screen so you can see what those look like, all in the mid-market report here. So let me open that back up. Didn't mean to close that. And on the next video, we've got some even more interesting. We're going to do deal and asset overview, what is selling, how the deals are getting done, everything that's going on PaperStack, so you know where the marketplace is. So we'll see you on the next video.